Let us slowly move to the secondary markets or the stock markets, which is the main thrust of this presentation. And we start with history. History has many, many lessons to teach us. There are some excellent books written about the history of world financial markets. And when you read them, what you discover is that the same story is being repeated. Those of you who study economics or have at least a handshake knowledge of economics, you will have heard that business, the economy, industry moves in what are called cycles. So you have a boom, you have a recession, boom, recession. When the moment you say cycles, what's happening? A boom, prices go up. Recession, prices go down. So as long as there have been markets, we have been experiencing these occurrences, which means the markets are nothing but a case of history repeating itself. Now, when you have an environment or area in which history repeats itself, you should consider yourself fortunate. Why? Because then you can learn from history. If every historic occurrence is something unique and new, never seen before, and probably something which will never be seen again, then there is nothing you can learn. The occurrences are random. But in the stock market, history tells us that the long-term cycles and occurrences are certainly not random. They just repeat themselves. Therefore, it is important to have an understanding of history before we proceed further. Why is this important? In the book The Intelligent Investor, Benjamin Graham quotes a Spanish writer and philosopher called George Santayana. And this is what Benjamin Graham says. No statement is more true and better applicable to Wall Street than the famous warning of Santayana. Those who do not remember the past are condemned to repeat it. When we say Wall Street is a metaphor for the stock market. So he says, no statement is more true and better applicable to the stock market than the famous warning of Santayana. Santayana said, those who do not remember the past are condemned to repeat it. If you do not learn from history, you will have the misfortune of learning from bitter experience firsthand. And as the old saying goes, experience is a very harsh teacher. It gives you the test first and the lesson afterwards. We are all used to getting the lesson first, then preparing for the examination, and then sitting for the test. Experience is not like that. Experience, straight away, first day you appear in class, exam. Then you sit and start learning. How do you get out of this trap? You get out of this trap by learning from other people's experience. Instead of trying to learn it on your own, the wise people learn from other people's experience. How do you learn from other people's experience? Of course, you would have instances within your own circle of acquaintances, your family, your neighbors, your friends. Or, to get a more well-presented version of what happens in the financial markets, there are excellent books on history. William Bernstein has written books, A Splendid Exchange, a 2,000 or 3,000 year history of the markets. And there are many others. There are many other good books. And even in books by Burton Malkiel and others, there's always a place for the history of the markets. When we learn this, we learn the lessons of history. Having learned the lessons of history, if we can incorporate the main lessons into our own investing style, into our own investing plans, then we take some giant strides in avoiding mistakes by learning from the mistakes of others. So those who do not remember the past are condemned to repeat it. So history is very important. And when we look at history of the stock market, a lot of people are not aware that world stock markets have a history of over 400 years. I remember early on, recently I have not asked the question, but say 15, 20 years back when I used to give talks to investors, I used to just ask sometimes a random question. How old do you think the stock market is? So some people would say 50 years, 60 years. Those were the main answers I would get. Then somebody says, no, hang on, There was something called Great Depression in the 1920s or 1930s. So I was a little older than that, say 70, 80, okay, 100 years. Now 100 years is not bad, but you'll be surprised to know that the stock markets have a history of more than 400 years. And Indian stock markets have a history of more than 200 years. So there is a lot that we can learn over this period. Now be very careful what I said. I was only talking about the history of the world stock markets, not of companies. Companies have a history much more than 400 years. So let us very briefly look at the history of one such company called the Basical Milling Company, which, where history is concerned at least, could be one of the oldest companies in the world. People had been milling grain at the Basical, a natural ford on the Garonne River in Toulouse, that is in France, since at least 1071. So we're talking about 10 centuries ago almost. In 1369, the mill owners who shared a perpetual lease on the river signed a profit-sharing agreement. They got together and signed a profit-sharing agreement. In 1888, it managed to successfully transition from mill to hydroelectric utility and listed publicly on the Paris Stock Exchange. We'll pause here for a minute. We are looking at a certain operation that took place 1,000 years back. And then this operation was by individual mill owners, something like our sole proprietors of today, one-man shows, so to speak. Now they get together about 3 centuries later because they see some sense, some economies of scale in coming together. And history tells us that just like human beings have lifespans, don't think companies are forever. A huge number of companies can go into liquidation. Some companies go into liquidation quickly, some companies last for generations, sometimes even centuries. Some companies are successful in changing businesses, like we see here, stopping one, getting into another, from grain, from the agricultural side, now to the hydroelectric side. So they are very nimble, they make changes, they embrace change, and they succeed. This is maybe a 200-year photo of the Basical Milling Company, just to give you a sense of history, nothing else. And moving from here, shares in the BMC were freely transferable without the company's involvement. Exactly what we have today. Revenue came from a 1/16th fee on grain milled. So there is a revenue stream that generates the top line. All profits were disbursed to shareholders through dividends. The process of accounting was not what it is today. And therefore, there was no question of drawing up a profit and loss account, charging the expenses. Whatever was earned was given back to the shareholders. And how do you meet expenses? Shareholders had to give some money back to the company for management. And if the shareholders could not do it, it was adjusted against the dividends that they had to receive from the company. And this is a picture of, on a parchment, one family's register of shareholders in the BMC from 1530 onwards. A record made of one family's shareholdings, who died, who inherited the shares, who sold the shares, who bought more shares. You can't read it, of course, but you can see some dates there, maybe starting somewhere in early 1530s, ending in somewhere 1566, over a period of 3 or 4 decades, how they have maintained the records of shareholding. The BMC was private and profit-seeking, just like today's companies. There were shareholder audits of the company's books. Once again, you see the resemblance. Investors did not directly manage the company except through its board of directors. So when you are an investor here, you were prepared to forego the right of day-to-day active management, appoint a board of directors who would manage the affairs of the company. Directors were appointed by shareholders at an annual meeting. Once again, exactly as we have it today. The liability of the shareholders was limited. So you see, the main pillars of company organization today was there in this company several centuries ago. Certainly not 1,000 years ago, but perhaps even 500 years ago. Free transferability of shares, limited liability, separation of ownership and control. I am an owner, but I do not control. There is a board of managers. The BMC was treated as a legal entity distinct from its shareholders. The individual persona, the artificial persona of the company was there even centuries ago. By the 1500s, the company had a chief operating officer, a treasurer and a clerk. This treasurer was something like today's chief financial officer. And don't be fooled by that word clerk. Clerk does not mean how we use it today. The clerk of this company would be something like what we call a company secretary today, at that level. In 1946, after World War II, the French government nationalized a number of companies, including the BMC. So from a private sector undertaking, it now became a public sector undertaking. It now continues as a hydroelectric plant, albeit under state ownership. So this company, this is how it looks like in modern times, which started with a number of mill owners coming together somewhere in the 1300s. Almost 700 years later, still has a life. Still has a life. Of course, now it's a public sector undertaking, but it continues as a company. And just because it was made public sector does not mean one day it need not be privatized. It can get back into the private fold. Prior to listing on the stock exchange, there were limited transactions. Now, if you are wondering why I was giving you the history not just of the stock markets, but even of a company, I just wanted to connect what has happened to companies with what is the role of the markets where company shares are concerned. So this is an important point. What happened before the stock exchanges? Naturally, there were no ready markets. When there were no ready markets, liquidity shrinks. Difficult to buy or sell. Today, if you want to buy or sell a stock, if you take any company of the Tata Group, almost every company of the Tata Group has its registered office in Bombay. But you may be a shareholder in Kashmir, you may be in Guwahati, you may be in Mangalore, you may be anywhere else. All you have to do is register with a broker in your hometown, and you can trade a company regardless of where it is situated, regardless of where its registered office is situated, regardless of where its manufacturing plants are situated. You can get information at your fingertips about the company. You can buy or sell by just lifting the phone, by opening an online demat account. You can be a resident in the US and you can still buy or sell on the internet. Contrast this kind of advancement with the real estate market. Even if you have a very good property, can you just pick up a phone, contact a real estate broker and say, okay, sell my property, I want the money by this evening. You can do it in stocks. If not this evening, you'll get it in 2 days, but you can sell today. Even for the sale, each unit of a real estate property is different. You can have 2 or 3 properties on the same road of the same city, but the dynamics of each property may be different. In the good times also, you can't conclude a deal immediately. And in the bad times, liquidity may disappear. Whereas if you take a Larsen & Toubro or a Wipro or a Tata Consultancy Services, you will be able to buy or sell shares, whether the index is 30,000 or whether the index is 15,000. The only difference will be the price at which you are transacting. Liquidity does not dry up in the good companies. Of course, there are the not so good companies. Contrast it with real estate, where liquidity is simply not there, whether it is prime property or, to use an American term that became famous sometime, subprime property. So this is something that we have to understand. And this was the fate of companies like Basical back before the shares were listed for trading on the stock exchanges. Transactions were costly. A substantial notary fee had to be paid for share transfer documentation. Just like today, when you want to buy or sell a property, in a procession both the buyers and sellers will go to the sub-registrar's office. Then some lawyers will be present, the documents have to be scrutinized, payments have to be made, then there's a process by which the property is actually registered there. And it is costly even today. In Karnataka, for example, the buyer will end up paying something like 7% of the value given there, or the assessed value, whichever is higher. So before the stock exchanges, you had these kind of problems. Also, a new shareholder had to host a dinner for the entire board of directors to display the notarized act of his purchase. So to add to the notary fee, you also had to give a treat to the board of directors to be in their good books. I told you that the world stock markets have a history of more than 400 years. The world's oldest stock exchange was the Amsterdam Stock Exchange, and the Dutch were the first to start joint stock companies on a relatively large scale. These let shareholders invest in business ventures, and the shareholders were able to get a share of their profits or losses. In 1602, the Dutch East India Company issued the first shares on the Amsterdam Stock Exchange. This was the first. It was not very famous because it failed in its objective to find India. That's why the British East India Company became famous. But the objective of the Dutch East India Company was precisely the same: to find or fund ships that could find and reach India for trade purposes. It was the first company to issue stocks and bonds. Let us briefly look at 2 or 3 leading stock exchanges, very, very briefly. The London Stock Exchange, you will be surprised to know, trading in London in shares started in what are called coffee houses. The rough equivalent of coffee houses will be our Udupi hotels. Normal places where people meet. Over a period of time, the same kind of people meet. Over a period of time, people who are interested in owning shares and investing in shares, they met. Slowly, as they started conversing, they found that there are some people who want to sell certain of their stocks, other people who want to buy. Slowly, the trading started from there. Today, of course, the London Stock Exchange is a leading stock exchange. And of course, all stock exchanges have mergers. Now there's a talk that they want to merge with a German stock exchange. All this thing goes on. And here is, if you go to a street in London called Change Alley is for Exchange Alley, you will find this plaque there. On this site between 1680 and 1778, note the period, more than 100 years, stood Jonathan's Coffee House, the principal meeting place of the city's stockbrokers. Even today, of course, the plaque is there because Jonathan's Coffee House, unfortunately, caught fire, and because of that it had to be closed down, probably in 1778. But for more than a century, it served as an unofficial stock exchange. Everybody who wanted to trade in shares would meet there. Just once again, to give you a sense of history, a painting of stock market trading in 1847 on the London Stock Exchange. And you yourself can see the development. This is 1847. By the time we go 40, 50 years later, 1891, another painting. A picture of the old building of the London Stock Exchange and what it looks like today. This is also a few pictures of trading actually taking place on the London Stock Exchange and of the building. Very briefly, once again, we'll look at the New York Stock Exchange, just spending a minute or two on 2 or 3 leading stock exchanges, including Bombay Stock Exchange. The origin of the New York Stock Exchange can be traced to this date in 1792, when the Buttonwood Agreement was signed by 24 stockbrokers outside 68 Wall Street in New York under a buttonwood tree. There's an uncanny resemblance between the Bombay Stock Exchange and the New York Stock Exchange. New York Stock Exchange original signatories were 24. Bombay Stock Exchange original signatories were 22. New York Stock Exchange started life under a buttonwood tree. Bombay Stock Exchange, brokers would meet under banyan trees. That's how the trading started. So quite a bit of resemblance there. On 8th March 1817, the organization drafted a constitution and renamed itself as the New York Stock and Exchange Board. On 4th April 2007, NYSE Euronext is formed out of the merger of the NYSE group and Euronext NV. The merger marked a milestone for global financial markets, bringing together major marketplaces across Europe and the United States, whose histories stretch back for more than 4 centuries. We are very fond of using the term NYSE, New York Stock Exchange. Actually today, the NYSE does not exist. There have been a series of mergers. The first was with this Euronext. And the latest was in December 2012, when the Intercontinental Exchange, or ICE as it is called, an American commodities exchange headquartered in Atlanta, Georgia, proposed to buy the NYSE Euronext for $8 billion. So New York Stock Exchange merges into something called NYSE Euronext, merges into something called Intercontinental Stock Exchange. We still refer to it as the NYSE because that's where the trading takes place and one of the largest, probably the largest exchanges in the stock exchange in the world. A few pictures of trading on the New York Stock Exchange across the decades. You can slowly see the advancements as they take place. Once again, we try to answer the question, why bother about stock market history? Larry Swedroe, a very good writer on the stock market, says, there is nothing new in the markets, only the history you haven't read. And quick look at two of our own stock exchanges. One is the Bombay Stock Exchange and one is the National Stock Exchange. Looking at the history of the Bombay Stock Exchange, it started life under this name, the Native Share and Stockbrokers Association. From there, the name was later changed to just the Stock Exchange at Bombay. And today, of course, it's a company called BSE Limited, but still referred loosely to as the Bombay Stock Exchange. The significance of this Native Share and Stockbrokers Association is quite interesting. Stock exchanges were existing not just in Bombay, but also in Calcutta, Madras, as Chennai was then called. In all the other places other than Bombay, the stockbroking firms were mainly British. That's why even today you find companies like McConaughey and Company, which is a Scottish name, which is there in Chennai, Patterson and Company. Of course, today totally owned and run by Indians, but the old names are still there. You will not find those kind of names in Bombay. Because in Bombay, back 200 years ago, the whole stock market trading was controlled by two communities. The first were the Parsis and the second were the Gujaratis. As the trading developed, and in 1875 the Bombay Stock Exchange was formed, these two communities wanted stock market trading to be in the hands of only Indians. As a result, they did their best to keep the Britishers out. So the very association that they formed was the Native Share and Stockbrokers Association. That's what's interesting about it. This is how it looks today. But back when it started trading, an informal group of approximately 22 stockbrokers used to trade under a banyan tree opposite the town hall of Bombay from the first half of the 19th century. In 1875, this informal group organized itself into the Native Share and Stockbrokers Association. The Bombay Stock Exchange is the oldest exchange in Asia. The Tokyo Stock Exchange is the second oldest, established in 1878. So this is something that we can be justifiably proud of, the oldest stock exchange in Asia. And this is a remarkable photograph taken in 1840 of a group of stockbrokers actually doing a business under a bunch of trees, not very far from where the Bombay Stock Exchange building stands today. This is from the archives of the Bombay Stock Exchange. Then, of course, there was a bank called the Bombay Bank, which lent out one floor to the stockbrokers to continue their business. And this is another photograph of a very old shares membership certificate. If you can see the date there, it's probably dated 1905, given to Jamnadas Morarji. The firm still continues under the JM Group, JM Financial Retail Services and JM Financial Mutual Fund, etc. So as you can see, the Native Share and Stockbrokers Association, this was a membership certificate given at that time. Then of course, like any stock exchange, there were developments. A broker's hall was inaugurated, and then slowly they acquired a plot of land to build their own building over a period of time. This was the old building of the Bombay Stock Exchange, and a very dynamic Parsi executive director of the Bombay Stock Exchange called Firoz Gigi Boy, nearly 14 or 15 years he was in charge of the Bombay Stock Exchange, and a lot of development took place, including the present skyscraper building. Then in 1995, the old manual trading was done away with, and they shifted online to the Bombay Online System of Trading, or the BOLT as it is called. So today we have a completely computerized trading in India, both on the NSE and the BSE. Few pictures of the old trading in the manual days. I myself have spent a week on this trading floor. Very interesting to see at that point of time. Tremendous noise, shouting. It almost appears as if they are fighting, but actually it's just the frenzy of trading. This is a picture of the old trading floor. Actually, I had spent time on this. This is a picture of the new trading floor. Today it does not exist. Today it's an international convention center. And when Bill Clinton was the president of the United States and visited India and Mumbai, he addressed a group of Indian business people and others. He had a conference in this very international convention center. It's a huge hall. Today, of course, your trading screens look something like this. Technology has played a big role in the stock market. So the financial sector has really absorbed and exploited technology to its advantage.